Part 2, realizable assets. Now, part 2 of your financial booklet relates to your capital resources, which could, in practice, be turned into cash, which is why they are referred to as realizable assets, and they cover a variety of assets, as you'll see. Some, or indeed many of these assets, may have costs and tax implications connected with transferring or cashing them in, which needs to be considered when valuing them, such as conveyancing costs or capital gains tax, as you'll see in part 2.1 below, the property section. This valuation process of deducting costs and any tax connected with a sale or transfer is often known as netting down. This netting down valuation process is necessary to achieve a fair financial agreement, even if there is no intention of selling or transferring the asset as part of your financial settlement. Please have a look at the Divorce Manual, Chapter 9, How to Reach a Financial Agreement in 5 Stages, which explains this in more detail. Moving on now to part 2.1, the property section. Now, when it comes to properties, whether it's your home, a rental, or an investment property, the aim is to work out the net sale value or equity for each property, whether or not it's the intention, as I said, to sell it or transfer it. You can see here the end result is here an estimate of the net value when you get to this point in the form. Going back up, so I've got a few other things to talk about here. Working out the net value will involve agreeing a value for each property and calculating what needs to be deducted, such as any mortgages and professional fees connected with the sale. So let's look at the information needed in more detail. First, you'll need the property address, it goes in here, and the land registry number, which is important. Now you can press on this link and it can take you through, as you can see on the screen, to the government site, get information about property and how to get details of the land registry details. Now, look, we recommend that you obtain a copy of the property title information from the land registry for each property using this web link I've just talked about to check there are no surprises on the register. If you need any help with obtaining or understanding the land registry information, please use this link. And if you need any more help, ask your mediator to recommend someone. Moving on to valuations. You'll need a few estate agents to visit your property and provide a realistic sale value, putting this in a letter for you to share with your former partner. Ideally, obtain 3 or 4 values to help you agree on a realistic sale value for each property. And perhaps invite your former partner to speak to the valuation agent if needed to reassure themselves. The better you can both work together on this, the smoother and more cost-effective the process will be. And please don't fall into the trap of trying to keep the valuation as low as possible if, for example, you are the one wanting to remain in the property or buy out your former partner. The price of failing to agree valuations is that you might be left having to instruct solicitors to jointly select and instruct a chartered surveyor to carry out a full valuation, which is likely to cost many hundreds of pounds and take a lot longer. So please put in your valuation information here once you've got it from your agents, and then put in what you're proposing, having got the information for the valuation for discussion and mediation here. On to the mortgage information. Let's put that at the center of the screen. Mortgage information. Again, please ensure that the mortgage details are accurate and up to date. Obvious information here, the mortgage company and account number, or at least the last 3 numbers of the account number, and the amount of the outstanding mortgage and the date of that. If there are current redemption penalties, again, that needs to go into here. And again, the type of mortgage is important going in here. Obviously, whose name the mortgage is in. If the property is in joint names, usually the mortgage is in joint names. And I say the type of mortgage, whether it's a repayment or interest. Let me just say something a little bit about redemption penalty. Sometimes when you get a redemption penalty, if you get more details, you might get, they might provide information such as how it's going to reduce over the coming years and whether it relates to a fixed term and so on. And that can be quite important. The best thing to do is just simply obtain an up-to-date redemption penalty document and share that with your former partner. Again, a little bit about the costs of sale here. You'll see I've estimated that at 2.5%. We suggest using an estimated sale figure of 2.5% to take into account, reasonable estate agents' commission and VAT, say 1.5%, and maybe 1% to cover solicitors' conveyancing fees and disbursements and VAT, total 2.5%. You can, of course, check how much your agents, if you are planning to sell a property, how much the agents would charge to sell it, and you can speak to a few solicitors to find out how much they would charge and insert those figures, the real figures if you like, instead of estimating it. This will give you the estimated net value once you've taken out the costs connected with the sale, including mortgage, redemption penalty, and so on. Now moving down the page, and you'll see a number of quite important boxes here, which may or may not be relevant. The first one is, ask the question, please provide details of who owns the property and extent of legal and beneficial ownership. For example, is it owned by you solely or jointly with your spouse or civil partner? The land registry title deeds already referred to will show who the legal owners are. Now, this may not be the same as the beneficial owners of the property. Sometimes it's not as clear who the beneficial owners are, since two people can be the legal owners, but not own the beneficial interest, or indeed own it in unequal shares. In this case, there's usually a trust deed somewhere setting out the beneficial ownership shares. In summary, I guess the legal ownership is about the title and control, whereas the beneficial ownership focuses on the economic benefits derived from the asset. Now, understanding these differences may be important to be able to, well, certainly would be important to be able to reach a fully informed, fair financial agreement and mediation. I also talk about providing details here, or asking about details for any financial contributions made by third party, i.e. not the legal owners. And this may be purchased to the purchase price or towards improvements and so on. In some cases, people other than you or your former partner may be claiming a beneficial interest in the property because they provided the purchase deposit or spent money on improvements to the property. For example, this may be a parent or other member of your family. If you believe that this is the case, it's important to explain this here and be able to provide some evidence of this for discussion in mediation, just in these parts here. The final part of the property section relates to capital gains tax. So this has moved down to capital gains tax, the last section down here. If the property has not been your main home, there is a good possibility that a sale or transfer would trigger a capital gains tax charge. This does need to be considered in calculating the net value of the property, and we provide here a link to the government website. Again, you'll see, as I highlight it, government tax sell property, work out your gain. There's a calculator on this site helping to calculate the capital gains tax. Now, if you need more help, one of our financial experts, speak to the mediator and they can recommend someone from our panel. Now that covers the kind of property section of the realisable assets. Just going back up to remind us, paragraph 2.1, the property section, and I provide space for not one, not just two, but three properties, because sometimes, of course, people have more than one property. So again, thank you very much for watching, and stay with me for moving on to the next section or the next video, part 2.2. Many thanks.